Welcome to the latest Motley Fool scoreboard. I'm on in Chocolate and we've got longtime fools, Travis Hoyam and Jason Hall, giving a 1 to 10 rating to a Moneyball wreck. It's Visa, ticker symbol V. Rate the strength of Visa's business, including factors like industry and all that competition. A 10 is invincible, a 1 is hopeless. Travis is at a 7, Jason, you're at an 8.
Yeah, and I love that we're doing this, Doc, because Travis and I, as much as our scores are going to sound the same, we have directionally disagreed on Visa and MasterCard and the payments ecosystem for years. And I come down to an 8 because I think there's always the threat of competitive disruption, but I think Visa has done a great job innovating and growing its relevance as the rails of finance in an increasingly cashless world and not really falling too much in the trap of just trying to play defense.
Yeah, and I just went a little bit lower. You can't deny that this is a very good business. You got network effects all over the place. You know, you probably have a Visa card either in your pocket right now or near you, you know, or even your phone, right? So that can't be denied. What I have to ask questions about more so is, what does it look like in the future? And I think the future, there's probably more risk of disruption in this ecosystem that we know of today, maybe not holding the same relevance in a world where digital payments are the go-to. Why do we need to have Visa, right? Like, this started as a physical card with the chunk machines that we maybe remember from our youth. So I just think that if you're looking at the past, this is a 10. If you're looking at the future, this is a 5. So we'll go with a 7.
For those who needed a second, I think Travis went the chunk.
I remember, I'm old enough to remember actually doing that in like the financial aid office my first semester at college, like putting down the card and doing that.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Travis is at a 7. Jason, you had to disagree, and you went with a 7.5.
I just had to have a higher score, but I don't think now Ryan McInerney has done a great job. But let's be honest, he's a caretaker CEO, but he hasn't fallen asleep at the wheel. Here's the thing: you look at his background, and I think it supports some of the risk that Travis has talked about that is real and it's there, of falling asleep at the wheel. This is somebody that, I mean, he was a McKinsey consultant. His background is in banking and payments. So like, it seems like maybe that sets them up to be disrupted. But Visa has done a really good job of spending money on R&D and being at the forefront of crypto and payments and AI. And like I said before, I don't think they're playing defense. I think they are doing a good job of playing offense because this continues to be a growing business. They've also been smart returners of capital and been really aggressive with share buybacks. And you look recently, they've spent a ton of money to buy back stock at a time when the stock is trading below its 10-year median price to earnings multiple. You usually don't see that with management. They spend a ton of money when the business is doing good and the stock's expensive. They're buying more of the stock when it's cheaper. So we can say that's where that 0.5, where that came from.
Yeah, I don't think there's anything bad to say here. I have a hard time going too high with management teams where you don't find, okay, here's this great new product that they launched or some new innovation, or they were the founders of a company, for example. But, you know, you look back, the stock is up 330% over the past 10 years. Obviously, things are growing well. The business continues to grow. I just don't see a lot of reason to be maybe overly optimistic about the management team and what they've done at Visa.
One of our hardest things on scoreboards is rating management teams, where it's just don't do much and you'll be fine.
Yeah. We should have a separate score for that. It's like a letter grade. It's like, you know, G.
Well, we all know what F would stand for.
That's right. For financials, that's what it stands for. A 10 is a fortress. A 1 is yikes. Both of you have 8s, Jason. Good segue.
Nice to bring it back to being family friendly there, Anand. So yeah, we're both 8. And you look at the financial profile, the cash flows are incredible. Every year you see them flexing that operating leverage. You get good revenue growth, not great, but good. But the earnings growth, earnings per share growth is even bigger, cash flows per share growth. The balance sheet's not as great as it was a few years ago. I'll let Travis talk about that.
Yeah, I don't like the fact that they have $12 billion in net debt on the balance sheet. This is one of those businesses that, you know, I expect to look and see, a little bit more growth than we've seen, 10% compound annual growth rate over the last 10 years. That's solid. That's not, necessarily the kind of business that you want to pay a super premium for. But then you look at that debt, and I don't know, it's just one of those things where I don't think that's the kind of leverage that management needs to have on the balance sheet. But it isn't a huge risk for the business. Got to go pretty high with the score, because we are, again, looking backwards. I don't know if they're going to be able to maintain these margins forever. This is an incredible business, incredible margins. But, is there something that is going to come along and maybe compete a little bit more on price? And that's something that they may not be able to react to, because they do have so many other players in the ecosystem, like the banks that are distributing cards. They're not the only one involved in the Visa payment ecosystem. So a lot of moving parts here if there is some sort of disruption in the future.
When you're making a lot of money, people want to take some of that money. Travis, let's talk valuation. Let's see how you think the stock will do over the next 5 years, and how safe it is. 10's a sure thing, 1's a lottery ticket.
Yeah, I said 5 to 10%, which is relatively low expectations. The stock's not crazily valued on a trailing basis. Price to earnings multiple is 29. Forward basis, it's 23. The reason I went relatively low with a 5 score from a safety perspective is I see that there is more threat of potential disruption, and that is coming from stablecoins. The reason to pay attention to that is the companies that are the front door to those payments, Stripe, Shopify, PayPal, they're starting to get much more interested in stablecoins. And then you look at who's actually paying the bills to Visa, to the banks that are issuing those credit cards. It's merchants. Merchants have a huge incentive to not pay that 2.5% to 3.5% fee that they're paying to take credit cards. By the way, you're seeing those fees pop up more and more. You go to a restaurant, there just happens to be a surcharge of 4%. So we're starting to see that real cost starting to hit our pocketbooks. Does that start to shift the incentive away from the existing credit card infrastructure that has been so profitable and grown so much over the past 40 years to something like stablecoins? Same devices. You can do it with your phone. You can do it with money that's in your bank account. But the friction is not there. The same fees aren't there. I think that's what I would worry about from a safety perspective.
Yeah, I think those are valid concerns. I'm not quite as convinced that it's going to upset the apple cart for Visa and MasterCard as well. So my safety score is a 7. I think the multiple, that 29 times earnings, that lower forward multiple, that's about 15% below the 10-year median. We did go through a period where it was expensive, but we're looking at a really reasonable valuation now, again, based on the growth rate. And what I think is they're going to be able to protect those margins a little better. So my safety score is a 7, so it's also higher. And this just comes down to Travis and I having a little bit of a different view on where we see the competitive threat and the risk of disruption. Look at the past 10 years. Even the past year and a half has not been a good time to own the stock. It has not done well. But even with that pullback over the past decade, total return 16.5%. That's extremely good. I don't think we're going to get that again. But again, I think 10 to 15%, probably around or maybe even a little bit better than the market. I don't think is too much to expect.
And by the way, if you want to look at some data behind what the potential disruption is, Visa itself has a stablecoin dashboard that you can look at. $78 trillion in transactions in stablecoins over the past 12 months, and it's going up like a rocket ship. So Visa is aware of this. It's possible they play a role in the future, but it's something for investors to keep an eye on.
Absolutely agree.
Thank you to both Travis and to Jason. They've given Visa a solid overall score of 7.0 out of 10. For topics, Jason prefers you-know-who, MasterCard, while Travis prefers Coinbase, particularly for its role in the Circle stablecoin ecosystem. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Serve Robotics. Till then, Fool on.